Okay, if buying and selling is the idea, and if markets are there to facilitate trade, then what we need is agreement. A seller and a buyer both have a motive. A seller wants to make as much money as they can off of selling an item. A buyer wants to pay as little as possible to acquire an item. Can we agree there? Because of their beliefs, they are diametrically opposed. I mean, two people could not be further away from one another than sellers and buyers. Because people are greedy and selfish. And people are self-serving. People are not in the market to ensure your success. They're in the market to ensure their own success. So if you are a seller, you want to sell whatever item. Here are some items, right? I got a lei from the resort. I don't know how much that's worth. You got some Beat headphones, because if I'm trading in the room, I got to keep my beats on because I'll be waking up my wife. And a bottle of water. We can make a market around these three things. And they do it every day. If you go to a mall, you can buy one of these. That's a market. If you go to a mall, you can buy one of these. That's a market. If you go to a mall, you can buy one of these. That's a market. Now, whether you're the people who make Lays, or if you're Apple and you make Beats, whatever, phones, or whether you're the Hawaii Water Company, what you want is to be able to sell these for as much money as the market will bear. As much money as I can make off of these, I want to make off of them. Can we agree that sellers want to make as much money as possible? Somebody say, I agree with you, Jay. I agree. Okay. Now, if you, Jay, or if you're anybody else in the world, you know, I don't want to pay what the seller want me to for any of these. I don't want to pay. Not what they want me to. No, I want to pay what I want to pay. I want to get it for the lowski woski. Where my friends and family at now? Now, I don't mind paying a fair price, but I ain't about to pay overprice. Come on now. Come on. I see, there go my family. James, I see you. Tammy, I see you. W. Bracy, I see you. Aaron, I see you. Look, we don't want to overpay. No. So by their nature, buyers and sellers couldn't be any more separate. Because buyers want as little, they want to pay as little as possible. And sellers want to be paid as much as possible. Two people could not be further away. What gets them to agree? Because we're still talking about support and resistance. What gets buyers and sellers to actually agree? The market. That's what does it. You see, you might be able to fool one man into paying $1 billion for Beats headphones. And one person might be able to get these for $5. But the market in total, everybody will give the seller a better, fuller picture of the sentiment of value that what they've created is worth. Let me find out if I can say that better. Look, you might fool one man, you ain't gonna fool 1 million of them. You might beat one seller, but you can't beat all of them. See, it's not every day. Like every day people don't come home saying, "Ooh, I got this car for $3,000 and it's brand new." Every day people don't say, "Man, I bought this apartment building and man, I got it for a steal." Most times the market will bear out the price. How do they do that? Well, in our markets, the best way to do that is this tool called an auction. Listen to me. An auction, an auction, an auction. Somebody type auction. Okay, what is an auction? Well, an auction goes like this. Somebody sits down, you go to Sotheby's, you go somewhere, and they say, "Hey, we got this bottle of water, starting price $1 million. And nobody buys it. Why? Because it's too high to buy. The more and more you come down in the price, the more interest you will find in the item. $100? No. $50? No. $20? No. $5? Maybe a couple. You get it down into that $199, $159, and you'll see a lot of buyers. Now we're talking about support and resistance. What I'm telling you is, if we start this item up here at the ceiling, and we ask people to bid on it, you will not find bidders or buyers until you get to a price where everybody can agree on the value of the asset. That is support. That's the price that you got to be at with this asset in order to find someone to bid on it. Now, for all of you all who don't know, markets are always trading two prices. Two prices. You will never get to a market and it's trading one price. No, it's always trading two prices. You have two prices. They have two names. The two names are the ask and the bid. The buyers are willing to bid something. The sellers are asking for something. So the sellers are asking for $1. The buyers are bidding 99 cents. They're bidding under the ask because a trade is only facilitated with healthy negotiation. Man, come on now. This is a course all by itself. If you take a job, it is because they offered you a price and you agreed to it. You were the seller of your skill, and the job bid on your skill. You had multiple offers for your skill, but you gave your skill to the highest bidder. It's the person who would buy the skill at the highest price. Does this make sense to anybody? Is this making sense? Does this make sense to anybody? Because if you have any item, you can begin to a conversation about the value of the item. You don't believe me that auctions work? Well, go to eBay. They built a $1 billion company off the idea of introducing an item and letting everybody bid its value. Now, one person might bid very low and another might bid very high, but most of the bidders are going to come in around one another, the same price. Sexy Prod, I see you. I'm gonna try and come at it another way. Amazon, eBay. eBay is a great way to see it, because if you have a sneaker, you can put the sneaker on eBay and collect bids for it. You don't have to take the first bid. You'll take the highest bid. And see, sellers and buyers are introducing an item to you every day. Hello, this is an Amazon stock. Hello, this is a Tesla stock. Hey, this is an interest rate future. This is a 30-year treasury bond. Where is the value for it? Well, if you are, what's the boy named that owned Tesla? You think he thinks his stock very high, much higher than any other. The boy who run Apple, he thinks his stock is very high. But the market has proven that the fair value is lower. Yeah, Elon, that's his name. I appreciate that, Teray. Thank you, brother. So Elon might think Tesla stock should be through the roof. But the market has decided that it should be its current price. Because it does not matter what you think of an item. It matters what the most of people think about it. That is the market. Those are the participants. See, now in any market, you have three people. I got to back up a little bit. You have buyers and sellers and people waiting to be buyers or sellers. There are buyers, there are sellers, and there are people waiting to be buyers and sellers. All right, I just dropped a lot. Let's take some questions. D Blessville, Dilichukwu. I think I said it right. Dilichukwu, much love to you, baby. Let's bring his question up. Dilichukwu says, hold up, there we go. But Jay the trader, we don't know how these prices are determined, and we don't know who bids or who asks. Well, there are formulas to determine a price. Listen, now this might be a bit specific, this might be specific to you, baby, but you will have to find a formula. If someone asks you to buy a home, what you will first do is find comps, comparables. They want you to buy a 4.5 oceanfront property. So you're going to go out and you're going to find the last 4.5 oceanfront properties within a 5-mile radius that were sold in the last year. If you add them all up, divide by 5, find out where they were bought for, add them all up, divide by 5, that's the current value. That is an equation to find comparables. And in our supermarkets, we do the same thing. Do you notice on here that they have 33.81 fluid ounces in here? And in the price at the supermarket, they'll have the price of the item, then they'll have the price per ounce so that you can compare water by the ounce. This water might be more expensive, but it's cheaper by the ounce than the other waters. So you might feel more comfortable about buying it. If you're in the equities, you might have to do some market cap equations, some market cap, debt to income. You might have to do some other equations in order to find out what is the fair market value for this stock. Because a seller will try and get you to be a sucker, because that's what sellers do. Dilichukwu, man, somebody will come to you and say, hey, this water, God himself made this water. This water is $1,000 a bottle. And do you know people will buy it? They will buy it. Because the seller has created a narrative around a basic item. And that happens in the stock market. People tell you that you should buy this stock for some reason or the other. What you always need to do is get you an equation, something that you can use in order to understand real value. Great question. I'm going to take some more questions. All right. Somebody say, not a question, but just want to say thanks. Thanks for your wisdom, King. Slayer, I appreciate that. Much love. I think it's amazing the amount of energy or positivity you put towards helping people. Man, that's love. Somebody screenshot that for me. Send that to me. Please do that for me. Somebody screenshot that for me right now. Thank you so much. Did anybody screenshot it? Somebody that I love and trust. Somebody screenshot this for me. I keep moments like that for when I get tired and when I don't think I can keep going on. So I appreciate you saying that. We're almost to the good part. Jarvis Campbell, where can we go to join your community for learning? If you click the link in my bio, there's a bond market mastery course. That course is amazing. You can buy it or not. I'm going to keep helping people as much as I can. And the course, if you think that this is good, just imagine what I can do if you really give me some time. We've only been together about 45 minutes. And I told my wife today, I said, I have a feeling I'm going to end up giving a lot, because you can't talk about support and resistance without talking about a whole lot of other things. So I appreciate it. Notice that today we haven't opened a chart yet, because you don't really need a chart to understand people. I'm restarting the course due to a serious accident 2 weeks ago. Sorry about the accident, man. I hope that you're doing well. Thank you so much. Thank you. Into purchasing your course. How do I connect my peers to help guide me through the live simulator? Well, we have a great community, and you can join the subscription community in order to be on like our Slack, in order to be a part of the things that we're doing on a daily, to come and trade every day. It's a very minimal subscription, and you can hang out, because I do believe that, trading together is best, especially when you're starting out. What's your primary time frame, support and resistance? That's a great question. Me, I'm a day trader, or they would call an intraday trader. So I tend to look at the dailies, a mid time frame like the 60s, and I look at a small time frame, the 5s. However, if you want to take longer trades, they call them investments. So you would look at a longer time horizon in order to do so. So you might say your small time frame is a monthly and your large time frame might be a yearly or a 5-year chart. And that way you can see how well an investment could perform for a longer time span. Okay? Namesake, what it do, baby? Y'all don't know that's Jay Taylor, man. One of the greatest film directors, video creators out west, doing some great work. Proud of you, big dog. Always proud of you. And I'm always watching the work. Victoria, my secret said, do you trade futures? Yes, I trade the 30-year treasury bonds and the S&P 500 primarily. Can you compare that to FX and or binary options? Binary options is a play. Like you take the option on something that's going to happen in the future, but what you do is call it before it happens. So if you take a binary option trade, it's like saying it'll be above or below a price, depending on whether you call or put that price. I'm not a huge options person, but I know charts, so I can take options trades. Forex is fantastic. It's a great market if you wish to participate. However, I find that it's a bit, to me, it's a bit tricky for new traders, just because there's so many different games to put together. In my opinion, I think Forex might be the most difficult thing to trade of everything that you have to trade. It's very, very difficult. Did I answer all of that? I think I got it all. Can you trade 24/7 or only when the stock market is open? Well, some markets are open 24/7 and some markets are not. Just like the mall. The mall will facilitate trade as long as the doors are open. So the bonds are open 5 days a week, 23 hours a day. There are some things that never close. They're always open. There are some things that are only open 3 days, 4 days. So it all depends on what you trade, saying how you can trade them, the time and the hours of operation. But that's with any business, every business has an hour of operation. Okay, more questions. And I'm serious about the questions. I know, guys, if you all are frustrated at answering questions, it's going to be tough because I really do take my time to answer people's questions. I think that that's the biggest thing. Most people are skeptical. I'll tell you, people don't even believe that you can make money trading. It's crazy. People think that it's a gamble. People think that you only got to get lucky. People think you can only make money if the market rises. People think so many different things. And just to be able to ask a question of a professional trader is big, because how many professional traders answering questions on Sunday afternoon? None. Normal retail traders have no control over the market. Institutions move the market. Why, yes, I totally agree with you, P-Tux. I think that you have a pretty good way of saying that. But what we're still talking about is something like amount of people, right? If you're a trader, an institution just approaches the market with more buying power. It's not that they are an institution that they can decide or move a market. It's that they come into the market with so much buying power that they have the opportunity to move markets. A retail trader does not, quote unquote, move markets themselves. However, P-Tux, what I would ask you to do is go to YouTube and I want you to look up ants devour and then type any animal. Because by and large, ants are nothing until they all get together and decide that they want to kill a frog or a wasp or a bee or a possum or a lion or an elephant. I'm going to tell you, even as big as we are, we don't want to step in an ant pile. P-Tux, when was the last time you deliberately went and stepped in an ant pile and left your foot there? Because while ants are small, they can hurt you. So institutions, quote unquote, move the market, but institutions are just using ant money at a large rate. If all the ants decide to get together, it can be a problem for the institutions. Just think about a couple months ago with GameStop. Okay, so great question though, and great observation. Here we are. Mahogany said, time frames are shown on the charts to determine the significance of levels. Yes. If you pull up a chart, you can also pull up a chart and the time frame you want to look at. So you can look at the market from different perspectives. Okay. All right. Let's go to the final. This is how we make money. We did support. We did major and minor support. major and minor resistance. We did markets, why they exist, what makes them healthy, what makes them unhealthy. We did buyers, sellers. So we did participants in the market, buyers, sellers, and people waiting to be buyers and sellers. And we also did market psychology and opinions. We talked about the fact that you might beat one person as a seller and you might get one sucker to buy it high, but markets tend to level themselves out, quite like eBay or any other auction-based market, because that's what our markets are. They are auctions. Tesla stands on the side of the road beside the rest of the companies and says, hey, come buy me. And depending on whether or not they're exchanging the value at a fair rate, we participate or not, okay? So we have that. This is a concept that I want to teach you, and it's called the point of control. Somebody type point of control. I'm not going to move forward until you type it. Type point of control. If you're on Instagram, type point of control. If you're on Facebook, type point of control. Point of control. Point of control. Are you typing that? Type point of control. Point of control. Point of control. Tammy, I appreciate you. Tammy, DM me after this. I just appreciate your energy. Thank you. Point of control. Jay, what is the point of control? The point of control is the place where most buyers and sellers agree on price. Listen to what we have. We call it an investment or we call it a trade, but a trade is that. It is a trade. On Instagram, it says 1 minute and 54 seconds left. So I'm going to have to leave and come back. But don't worry, I'll come right back, Instagram. Point of control. All right. So let's just do this. Let's take a pause. Instagram, I'm going to close this down, share it, and then come right back live. Okay. And Facebook, YouTube, is that okay that I don't get started on point of control without them? Is it all right? Type if that's all right. All right, because we don't want to leave people behind. That's what family is about. We don't leave one another behind. All right. All right. Okay. Okay. Tammy says it's okay. I'm okay. I'm leaving, but I'm coming right back. All right, Instagram. Here we go. I'm gone.